Here is a summary of JetBlue's Q3 2025 earnings call transcript, focusing on key financial metrics, management outlook, risks, and highlights. Introduction and CEO's opening remarks. The call begins with an acknowledgement of Hurricane Melissa and extends thoughts to affected crew members and communities. CEO Joanna Geraghty highlights the company's progress on its JetForward plan, emphasizing the team's resilience and adaptation to evolving demand. She proudly states that JetBlue ended the quarter at the better end of guidance ranges for all metrics, with meaningful margin improvement. Financial highlights and performance revenue. While specific Q3 revenue figures aren't explicitly detailed in this excerpt, the transcript indicates that unit revenues, RASM, ended the quarter down 2.7% year-over-year, performing better than initial guidance. Demand for peak travel remains strong, particularly in the premium leisure segment. Profitability. Management expresses optimism about improving profitability. They are on track to generate $290 million of incremental EBIT this year from JetForward. The goal for 2026 is to achieve at least break-even operating margin. Gross margin. The transcript mentions meaningful margin improvement compared to initial expectations and an operating margin 3 points better than what was implied by our July guidance ranges. Costs. Cost performance was strong, with CSM ex-fuel up 3.7% year-over-year, beating initial guidance. Full-year CSM ex-fuel guidance was improved to up 5% to 6%, with the Q4 forecast at 3% to 5%. Maintenance costs are noted as a headwind for the next year, but overall CSM ex-fuel is targeted for low single digits in 2026. Management's forecasts and future outlook. Q4 2025 outlook. Unit revenues are expected to be flat to down 4% year-over-year. Demand trends are predicted to continue, with robust demand for premium products and healthy peaks. Troughs will be actively managed through capacity adjustments. 2026 outlook. JetBlue expects low single-digit unit costs underpinned by low to mid-single-digit capacity growth. Capital expenditures are projected to be at or below $1 billion annually through the end of the decade. The intention is to build a plan for 2026 that achieves break-even or better operating margin. Long-term targets. JetForward aims for $850 million to $950 million in incremental EBIT by 2027, with contributions spread evenly over 3 years. Significant risk factors. External factors. Hurricane Melissa impacting operations in Jamaica, airfield construction at Boston Logan and JFK negatively impacting on-time performance, and the ongoing government shutdown are mentioned as potential disruptions. Industry challenges. The transcript acknowledges industry-wide challenges and customer confidence issues in the airline sector. Macroeconomic environment. Continued improvement in the macro environment is a factor factored into 2026 projections. Maintenance costs. Maintenance is identified as a headwind for the coming year. Highlights JetForward progress. The company is making meaningful progress on its JetForward plan, delivering on or beating commitments. Operational improvements. Completion factor and on-time performance have improved year-over-year, with positive impacts on Net Promoter Scores, NPS. Fleet modernization. The retirement of the Embraer E190 aircraft completes the transition to an all-Airbus fleet, driving efficiencies and enhancing the onboard product. Fort Lauderdale expansion. JetBlue is deepening its presence in Fort Lauderdale with new routes and increased frequencies, aiming to strengthen its position as the largest carrier there. Blue Sky collaboration. The partnership with United Airlines is progressing well, with initial benefits seen in loyalty program integration and increased card acquisition. Cross-selling of flights is expected to begin soon. Premium product enhancements. Investments in premium offerings like the Premier Card, upcoming lounges, and domestic first class are highlighted as key drivers of incremental earnings. Loyalty program growth. Double-digit loyalty growth continues, with co-brand remuneration up 16% and TrueBlue revenue up 12%. Government shutdown. No material impact has been seen from the government shutdown yet. Lowlight unit revenue decline. Unit revenues were down 2.7% year-over-year. Domestic RASM lagging. While domestic RASM saw sequential improvement, its relative margin performance still lags international. Capacity headwinds. The capacity investment in Fort Lauderdale and increased domestic competitor capacity are expected to be a headwind to RASM in Q4. Hurricane Melissa impact. The impact of Hurricane Melissa on Jamaica operations is still too early to quantify. Most important statements from CEO and CFO CEO Joanna Garrity. Our results this quarter are an outcome of these efforts. We ended the period at the better end of our guidance ranges across all metrics, including unit revenues and costs, realizing meaningful margin improvement compared to initial expectations. Building on the progress since we've announced JetForward 5 quarters ago, our operational metrics and customer satisfaction scores continue to improve in the quarter. We've built a strong foundation with JetForward, and we are on track to generate a cumulative $290 million of incremental EBIT this year. We are encouraged by the progress so far, and we are confident we are on the right path to restore profitability, building a stronger JetBlue for our customers, crew members, and our owners. CFO Ursula Hurley. We ended the quarter with an operating margin 3 points better than what was implied by our July guidance ranges, supported by a more reliable operation, greater close-in demand for our products, and our team effectively controlling costs. It is clear the investments we are making in our operation are increasing efficiencies across the business. As we work through our budgeting process for 2026, we expect our unit cost next year to be low single digits, underpinned by low to mid-single-digit capacity growth. Taken together, we are confident we have the right initiatives in place to drive meaningful profitability improvement in 2026. And while we are still in the early innings of our budget process, it is our intention to build a plan that gets us to break-even or better operating margin for 2026. This summary provides a comprehensive overview of JetBlue's Q3 2025 earnings call, covering the key financial points, strategic initiatives, and forward-looking statements.